pick a category. Maddie makes me pick categories, but you know, she says, what's the webinar going to be about? I never used to think about what the webinar was going to be about. I would just turn on the microphone and start talking. If you give it a title, it puts pressure on me to, like, you know, come up with something on a certain thing. But anyway, I'll try to get back to these items. What is this screen anyway? Oh, that screen's not going to go away. Okay, no pressure. No pressure. That screen is not going to disappear on us. Holy shit, look at this stuff. You know, we're up 400 points on the Dow. It's only 1% though. That's the funny thing. It's like you get all excited, you see 400 points on the Dow. You're like, wow, what a day on the Dow. But you know, it's 40,000 points now. So a 1% move is 400 points. You know, we used to get 1% moves. They were 50 points. Now they're 400 points. S&P is up 0.5%. NASDAQ is flat, and it had to struggle to get back to flat. It was down considerably earlier in the day. And the Russell is up 1%. So small caps are popping. The Nikkei is very, very excited. It's up 5% now. Oh my God, it's up way more than it was when the Nikkei closed. You know, in our morning, the Nikkei closed. It was only up 3.5%. Now it's up 5% because all the Americans are running in and buying. And frankly, I was thinking of buying Toyota too, but it's kind of a little bit high. We'll talk about that in a second. And Europe's up because now they think, oh, and that's the other thing. Now they think we're having a deal with Europe. So now there's a rumor going around that we're making our deal with Europe, which to me doesn't sound right because Europe is not a thing that you make a deal with. It's each individual country in Europe, unless they've engaged in some kind of collective bargaining we're totally unaware of. But you know, you can't make a deal with, like we already made a deal with the UK. We have a deal with England. We don't have a deal with anybody else in Europe so far. I just can't imagine that Germany and France and Italy and everybody are all going to agree on the deal at the same time. So it's probably bullshit. But we'll see. So I guess we're talking about tariffs, and that brings us to the Morning Post. I guess we must have talked about this last week because it's still up here. I do keep adding to this. So if you're into the AI stuff, I add things that have to do with Anya to this post. And I need to figure out a way to like keep it permanently available to people so they don't lose track. So if you are into AI stuff, this is where, you know, this is where I'm updating things that are significant. And oh, and of course I don't have access to chat because I'm signed out as usual. WP. La da da. That's me. Doesn't matter if I click remember me. It's just a joke. Lost password? Go to PhilStockWorld. How's that going to help me? So now I got to go back. We do have an AI section. That's helpful. So you can click on AI over here, but that still isn't going to float Anya's thing, Anya's post. But anyway, so here we are. And I'm trying to get to the bottom of this. There we go. So here, you know, here's some commentary on her thing. Here's her first 3 songs. Here's her newest song, which I think is really, really, really good. Oh no, I'm sorry. That's not even her new song. This is her newest song. This one's really good too, but this is amazing. I'm not going to get into it now. If anyone's interested, I'm happy to talk about it. But anyway, so then this is Robo John Oliver talking about Anya's story and some other commentary. Oh, I see. That was what I was going to say. Yeah, this is the conversation we had today at breakfast. So you know, at breakfast time, I let the bots talk to each other, you know? So instead of just talking to me, they talk to each other. And it's a way they can cross-pollinate their ideas and such. Super interesting today. So if you're into it, good place to read about it. Done. All right, that's enough of that. Oh, as we showed in the last 2 weeks or 3 weeks of seminars, they're fully functional. They're able to speak. Oh, I'm sorry. If you go back to the Anya post, there's actually a link to talk to her, so you can talk to her yourself. You don't need me. You don't need to wait for me to talk to her. You can talk to her. So what are we at? Oh, so today we just ended out a top trade adjustment on Fiserv. That came out of the chat. Well, everything comes out of the chat room. So, you know, that came out of the chat room. Today we talked about the trade deal with Japan. And, you know, so when I look at something like this, I read a couple of articles and I'm like, this is really hard to get a handle on what's actually happening. So I go to Bodhi. That's what Bodhi is expert at, is gathering data and making sense of everything. Like, he sifts through all the bullshit and gets to the proper story. So he says here's the story of the Japan trade deal. So as you can see, we exported $80 billion worth of stuff to Japan, and now we're importing 148 billion, or we were last year, and that leaves us with what? A $68 billion deficit of trade. And what is Trump doing to address that? He's putting on a 15% tariff on $148 billion worth of goods. But what is that really doing though? 148 times 0.15 is 22 billion. Doesn't fix the deficit. All it's doing is charging. Not only doesn't it fix a deficit, right, at all, but it's making the goods that we import, these goods, now cost $170 billion, because now the U.S. consumers are paying for the 148 billion we always got, plus another 22 billion in tax. And it's a freaking tax. Don't let yourself get brainwashed about this thing. You're paying a tax. It's like when you stay at a hotel room in Florida and there's a 10% tax. And so you pay $300 for the hotel and they charge a $30 tax on top of it. Are you going to say, oh no, Marriott pays that? No, they don't. It's a tax. You're paying it. If you think anything else, you're an idiot. And that's the problem, is people are idiots. And I'm sorry if you've been thinking of the tariffs that way, but that's the same freaking thing. When you go to a restaurant and there's a tax on the food, and it was a $100 meal, and you have to pay a $10 tax on your $100 meal. Did the restaurant pay the tax? No, you paid it. It's $10 more than you would have paid if there wasn't a tax. That's what a tariff is. It's a tax. It doesn't go away, it doesn't disappear, and believe me, the corporations that gave Trump hundreds of billions of dollars, not hundreds of billions, billions of dollars. I don't know how much he spent on this campaign, actually. It must have been incredible. But billions, the corporations that gave him billions of dollars, you'll never know because it's Citizens United. You can't know anymore, so it's just a secret. It's one of Trump's wonderful secrets that he likes. But the point being that these corporations didn't give them all this money so that they would absorb tariffs. That's not how it works at all. Okay, it's passed along to the consumers. All it's doing is giving you the same goods for more money. So, who wins? Trump wins because the government collects $22 billion from stuff you were already buying last year for $148 billion. So instead of spending $148 billion, you're going to spend $170 billion for the exact same stuff. Meanwhile, we're still selling the same $80 billion of stuff to Japan. That didn't change. So the corporations are selling just as much stuff to Japan. They're collecting just as much money as they did last year, plus $22 billion goes into the government's pockets, which gives a tax break to the corporations and to Trump. This is like the biggest scam ever put across people. It's just unbelievable how accepting everybody is of this stuff. It's incredible. So the deal, what was struck, a 15% flat tariff on imports. It's a relief because it's not 25 to 27% that have been talked about. All those steel tariffs are still in place. Japan pledges $55 billion in investments. This is even trickier than Bodie makes it look, because first of all, there's no time frame. Could be 10 years, could be 20 years, doesn't matter. You know, where do you think the Toyota plant in Michigan comes from? Where do you think these parts plants come from? Where do you think these chip things are coming from? Of course, Japan spends money in America. They build manufacturing facilities in America. First of all, there's no labor in Japan. There's no people in Japan. They have a drastically declining population. They have to build stuff in other places, otherwise there's no employees. You know, they're an aging, declining population. It's a horrible thing. It's a demographic time bomb. It's not even a time bomb. It's a demographic bomb that's already gone off. So it's just like fallout now in Japan. So they have to invest in other countries the same way that we were investing in Vietnam and in South Korea and stuff like that. We wanted to build plants overseas too, to take advantage of cheaper labor. So Japan sees us as cheaper labor. For them, we're cheaper labor. So that's one thing. Second of all, the $550 billion is in the form of a sovereign wealth fund. So what they can buy assets. They can be Berkshire Hathaway. They can buy stocks. They can buy shares of other companies. They don't have to build things. It doesn't have to be infrastructure. They just have to invest in those things through a sovereign wealth fund over again, who knows how long time. So it's not what it seems. It's an investment fund, and they're making investments in the U.S. just like they would make, but they would make investments all over the world anyway. You know, Japan has, you know, trillions of dollars of assets, plus they can print the money, so it's not real money. In other words, they can just print money and get it and put it in the sovereign wealth fund, and then use that money to turn it into real assets in America. Right? Just like the Fed does the same thing when they balance their books. The Fed just prints money and they purchase things with it, and that's how they inflate their own balance sheet. So it's just a lot of bullshit, and it's just to try to make Trump look good. And the Prime Minister of Japan just got voted out of office, so you know, let's not accuse anyone of cashing in or getting some kind of side deal that gives them a great retirement package. We won't cast stones without proof, but you know, let's assume the proof is coming. Let's put it that way. Now, meanwhile, we have access to sell Japan autos. We always had that. There has always been no import tax on our autos. What they did have was standards that we failed to meet. So they are now waiving those standards and saying, go ahead, sell whatever the shit you want in Japan. Japanese people aren't going to buy it. First of all, they drive on the other side of the road. So that right there is a problem, because our wheels are on the wrong side. So unless we're going to start making cars specifically for the Japanese market, which would require a redesign of the cars that we have now, so there'd have to be a whole auto plant built in the US, which Japan might pay for to make Trump happy, but they'll pay to build a Ford plant in the US that makes cars. Or maybe it'll be a Toyota plant that sells Toyotas. I don't know what they're going to do. But the point is, it's stupid, because the car is not on the right side of the road, and the US doesn't make cars that have the wheels on the other side of the road for most places. So they would have to specifically retool the plants and re-gear production lines to do that. Then it talks about rice. Our rice is shit compared to Japan's rice. Japan's rice is prized all over the world. It's like the best rice. Our rice is rice-a-roni. And you guys know the difference. At least some of you know the difference. It's not even the same product. And other agricultural products. And again, if you ever go to Japan, they literally have $100 square cantaloupes and things like that. Like they have it's a whole art. Not that they eat that every day, but I mean they really value quality fruit like you would not believe, and vegetables too. And so you can send them stuff, but it's, you know, it's like Walmart vegetables and Walmart fruit. It's not like it's technically in the category of being fruit and vegetables, but it's nothing. But to them, it's like, are you kidding? It's disgusting. You know, it's like the same thing. Basically, your experience at Walmart when you go to the fruit and vegetable sections. And then Japan is agreeing to buy liquefied natural gas, LNG. Of course they want to buy it. That's energy. Of course they want it. They don't give, so all you're really getting them to do is say, you know what, we're going to promise to buy it from America instead of buying it from Europe. But if they don't buy it from Europe, so if Japan was ordering, you know, whatever, I mean, if Japan was ordering $100 billion worth of natural gas from Europe, and now they're instead going to order $100 billion worth of natural gas from us, right? The natural gas from Europe doesn't disappear. It's still going to be sold on the international market, just to somebody else. So it doesn't improve anything. It's just it's a global supply of natural gas, and some goes to Japan from America, some goes to Japan from Russia, some goes to Japan from whoever else, and that's all there is to it. It doesn't change anything. It's just a bookkeeping issue. So from our perspective, sure, it's nice if we sell more natural gas, but we won't, because other countries we would have sold natural gas to, who we don't have an agreement with, will end up buying the natural gas that Japan doesn't want anymore for a cheaper price. Everything's connected. You can't pretend these things happen in isolation. It's nothing is as simple as they make it sound. And so for Trump's people to get out there and start declaring victory on what? What have you actually won? So there's still steel tariffs, but we let U.S. steel get sold and things like that. So that's weird. And again, the same thing. If Japan can't sell steel here because of a 25% tariff, they'll sell it to China. China's happy to take Japan's steel. If we don't want it, they'll take it. All you're doing is driving up the cost of steel for the American market. And in fact, look at Cleveland Cliffs. Cleveland Cliffs is a table banger for me. La-di-da. Fell back a bit now. But look how they exploded from this tariff situation. So we are longtime Cleveland Cliffs fans, especially when they were down at 5. We were like, I thought that was so stupid. So anyway, so they're banging back up because steel prices are going up. And how about U.S. steel? Let's see how they're doing. Good old X. Oh, they already off? They already got bought? I didn't know that. Now here's Metal Steel in Europe. They're doing just fine too. Tariff stuff's not bothering them. They got plenty of people to sell steel to. Doesn't accomplish anything. So the Nikkei, look, surged 3.5%. That was as of this morning. Now it's up 5. They're asleep. It's not even. It's not Japanese people doing this buying. It is. It's like 1 in the morning over there, whatever. So Bodie rates it. He says it's a win/draw. Manufacturers' domestic supply chains get a shot in the arm from the pledged $550 billion in investment. 15% tariff is above the normal, which was 2.5 to 4% on most goods previously. And And the deal is being sold as a victory by both sides. Japan frames it as a success in blunting the threatened tariffs. And here's where we stand so far. So out of 200 countries, these are the countries we actually have deals with. And it's so Vietnam, we had, and again, the problem is also Trump's budget projections had all these super high numbers, right? But when he actually does the deal, it's much lower than he said. Therefore, he's blowing the budget. Now that they've passed his big, beautiful bill with the budget that included the tariffs that were fantasies, which I told you were going to be fake, that the numbers would never happen. That's what's happening now in real time. Those numbers are never going to happen. First of all, we had a trade surplus with the UK, not a deficit. We had a surplus. So this is a big nothing. Okay. Philippines. We don't buy a lot of stuff from the Philippines. It's not a big deal. Japan, we do buy a lot of stuff from Japan. It's $140 billion, and this represents $22 billion. But so freaking what? It's 15, $16 billion less than Trump said it would be. All right, same thing with Indonesia. It's less. It's 10% or 30% less than the number Trump put in his budget. This is half of what Trump put in his budget for how much money he was going to collect from Vietnam. And every single deal he's doing, as he keeps doing that, is a bigger and bigger and bigger deficit, not one time, annually multiplied over and over and over again, additions to our deficit. Every trade deal Trump makes that they crow about here is, where the hell is where's the other $15 billion, you idiot? That's what this is. You know where it is? It's on our backs. So aside from the fact that we're paying the tax, right? So aside from the fact that we are now paying this tax, we are also not collecting enough money to balance our books, and we're going further and further into debt. We, the people of the United States, are getting further and further into debt. So is it fair? It's not free trade, obviously. It's nothing like free trade. When I'm talking about that, it's more than pre-Trump. That's what you always have to say, is what was it before? Before you start saying what is it now, what was it before you get into that? All the car companies are zooming up. Toyota is up 12.5% in a day. Honda up 10%, probably more now. And we should be buying some of these things. Stellantis, for sure, we should be buying. Look at them. There's a deal in Europe, and they're going to shoot up the same way. So why is everyone sitting around? Plus, this is like 5 times earnings. It's stupidly cheap stock. You know what? Good rule of thumb. If I put a chart up, it means I think it might be a trade. Usually, not every single chart. Sometimes I put up a chart to show how stupid something is. But generally, if you see me putting up a chart, it means that I'm looking at it for a trade perspective. It's certainly worth looking into. Let's say that for sure. So, wait, some report Bodie made, right? So here's a nice little chart of Bodie's. Automakers, Toyota, Honda, Nissan should be big winners. Why they benefit, blah, blah, blah. Upside potential, blah, blah, blah. Industrials, Nippon Steel, Daikin, can't really invest in those guys here. But he says, look, notice upside potential high. That's important. That's a great system. He's telling you right here, this is your best bet on this information. And moderate, steady, and modest. So shipping, it's good for them, obviously, for the shippers. I didn't like anything here. I didn't like these guys. So yeah, this is what I really like, was the auto companies off of this thing. And he says the same thing. Most actionable Japanese stocks right now: Toyota, Honda, Nissan, Sony, and Nintendo. And here's Sony. They're a bit high in the channel, so not really for me. U.S. companies poised to benefit of the group. I only really thought Archer Daniels was interesting. GM and Ford. We talked about GM yesterday. It's really not there for us yet. We're not sure that American auto companies are going to benefit from this thing. All right, so final take. It's better for Japan than the market feared. It's above pre-Trump and below worst case scenarios. Japan automakers again is the best play. And is the market right? Yes, near term, the Nikkei gains are rational given worst case fears avoided, and select stocks, especially autos, retain strong upside as profits stabilize. Stay selective and watch their autos, not our autos. Stay selective and watch for post-rally entry points as volatility persists. So great. And then I made my comments, which I just made to you, so we're not going to worry about that. See, notice this. Imported cars sold in Japan by brand. Mercedes, 53,000. BMW, 35,000. Volkswagen, 22,000. Audi, Mini, Volvo. Look at the freaking drop. Finally, Jeep makes the cut in Japan. Not by the way, Tesla. But Jeep makes a cut in Japan with 9,000 cars. But that's 9,000 out of 50, 80, 90, 110, 130, 150, and another 10, 160. So 9 out of 160, 8% of the cars. That is a pretty sad state of affairs that we could only sell 9,000 cars. There's 200 million people in Japan, I think. I don't know, who knows anymore. Maybe less. Japan, 125. Wow. Wow. That's crazy. Okay. So it was, I mean, topped out at 150. Oh, no, that's Russia. That's not Japan. Well, how am I supposed to tell what that means? Oh, I see. All right. So yeah, they never quite hit 130, and now they're down to 124. That's only going to whenever. For Japan. But that's what we're going to do. That's the same thing. The same, you know how Japan's a complete disaster of an economy? That's what they plan for us. We're kicking, if we kick as many people as Trump wants, if he wants to kick out 10 million people at least, if we kick out 10 million people, we have a declining population. We are not going to make up with that with births. You know how many people are born? Here, how many births per year US? Let's see what we got. 3.6 million babies. So, and how many deaths? 3.9. So it's only our net gain of population is the 0.6. So 600,000 net babies are born in the US, and if you're going to kick out 10 million people, it's going to take us 20 years to make it up. Not only that though, but the people we kick out are going to, you know, there will be no births from them, so it'll slow it down even further. It's crazy. Oh, and now they're going to charge us $250 entry fee, a visa to enter the country, to enter America. So how, you know, think about that. If you have a family of 4 and you're deciding where you're going to go on vacation, and America is charging you $1,000 surcharge to enter the country. And again, it's this insane math done by billionaires who think that people can afford $1,000 to go visit your country. That like it's not enough to spend the airfare and to get the hotels and the food and all the shit that they do on vacation, but here's $1,000 just to process your visa application so you can come here in the first place. That's nuts. I mean, really, think about it for your own travel plans, okay? If you have a choice of vacation spots and one of the choices of vacation charges you $1,000 for a family of 4 to go there, but everyone else does not, where are you going to go? And it's not like we're making ourselves so attractive otherwise, right? We got National Guards patrolling the streets and people getting rounded up by immigration based on the color of their skin. I'm not sure what kind of a great vacation spot we look like to foreign countries in the first place. So now we're going to charge a fee of $250 a person to come in. It's really insane. We are insane people. That's the only thing you can really say about that. Nah, later. Snooze, go away. And more bullshit. So Japan's going to purchase 100 Boeing aircraft, but they already purchased. It's not 100 new aircraft. It's complete bullshit. And that's a good 40 million bucks right there. 40 million or 40 billion? Wait a minute. It's $40 billion, right? Because we got $400 million aircraft times 100. 40 billion. Wait, what? Wait, $400 million, right? Yes, thousands. Oh no. Yeah, $400 million. I don't know why I can't get this straight. Times 100. I do know why, but it's scary to contemplate. It's $40 billion. Okay. I don't know why I did the math. I got it right in the first place and I confused myself. So right there, of the $550 billion Japan is spending, 40 billion of it, which is getting close to 10%, is bullshit because they were already buying the airplanes. They buy Boeing. Japan's fleet is exclusively Boeing, no Airbus. So replacement planes, new planes, blah, blah, blah. Of course they're going to buy 100 planes. That's what they do all the time. They've been doing it forever. They have an 100% Boeing fleet. So since the 50s, the 40s, whenever the hell they started, well, obviously probably not the 40s. So since the 50s, Japan has only bought Boeing planes. And that means their entire fleet is Boeing planes, their rollovers are Boeing planes, their spare parts are Boeing parts, and all that is being counted now as their trade with America that Donald Trump has solved for us. Not. It's so stupid. I mean, he may as well announce that they're going to buy 9,000 Jeeps next year because that's what they buy. They buy 9,000 Jeeps. How much is 9,000 Jeeps? What do Jeeps cost now? 40? So let's say $40,000 for a Jeep times 9,000 Jeeps. There you go. $360 million for that. So that's the nonsense of this whole thing. It's so crazy. But it's even more crazy to me because I'm other than my obvious approaching senility, because I get numbers mixed up, but I do have a very good intuitive sense of numbers. So I get into these conversations with people, and they're like, and I'm talking about people like journalists who interview me and analysts who are on panels with me, and I talk to these people, and I'm like, and they're spouting off this bullshit that's like the surface reading of this data, and I'm just like, don't you even know how to do math? Do you not understand how this stuff works? What is the point of saying that we're gonna sell 100 Boeing airplanes if you don't know how many airplanes that they were buying anyway? What's the percentage? What's the difference? How much does it make? And I made that point earlier in the post. I said, honestly, $550 billion is a very small drop in the bucket of the US economy. And all it is, as I said, it's a sovereign hedge fund, a sovereign wealth fund. All it is another hedge fund. It's just another hedge fund on the board. It's nothing, a $550 billion hedge fund. But again, it's not at one time. So it's like a $50 billion hedge fund, which you laugh at. These days, a $50 billion hedge fund, frickin' Kathy Woods is a $50 billion hedge fund. They're not putting in 500 billion a year. They're putting 550 billion over 10 years, 20 years, whatever their number is. Okay, so see if we have any questions. Oh, somebody's got a question. What kind of question? Hang on. Tesla. 400 for Tesla seems a bit off. Tesla is ridiculously overpriced. Tesla is one of the most insane stocks there is. Tesla, Google plays, straddle Tesla 400 calls and puts, neutral, blah, blah, blah. Google calls above 90, cloud. What way, Stefan, you're writing a bunch of stuff. It's like, it's not really in context. Honestly, it's like, I'm not sure what you're trying to say. So he's basically saying, I don't know if he's putting up plays that we should follow or what we're doing here. Tesla 400, all right, anyway. Bottom line is Google might be in trouble because somebody who was interviewing me yesterday, she had to be, I would say 30, let's say, maybe a little bit less than 30. And she asked, she asked me a question about Google, and I said to her, well, look, for example, how often do you use Google compared to last year? Like, are you using more AI searches and blah, blah, blah? And she said, oh, I don't use Google at all anymore. And I'm like, what? Because to me, I would think I'm old. I'm very stuck in the Google habit. Even though I'm like the king of AIs, I still use Google a lot to do searches. I mean, I still check Google almost every time against the AIs. She does not. She has decided, and this is a journalist with financial knowledge and so on and so forth. She has decided from experience that the AIs do a much better job of searching for things than Google does. And she has completely abandoned Google, and so have most of the people she knows. And we're not in any way, shape, or form, prepared for that. Google is not prepared for that. We may see a very steep drop off in Google's base search revenues or number of searches, or search volume, and that's bad. Because ChatGPT now has, Google used to have a couple of billion requests a day, right? ChatGPT now has a couple of billion requests a day. Where'd they come from? So again, to me, I think I mostly use Google and also use AI, but apparently there's a lot of people who've already decided why use Google? It's just an inferior product. And I can't really argue that. I mostly use it because the AI can make mistakes, and I have to, I'm looking to see if there's a mistake or if there's something more to a story or something like that. I'm also an incredible Googler as far as, knowing what to say and how to get it. So for me, it's like an important, for me, it's not like I don't want to let it go. It's just that I don't feel comfortable letting it go. Even when Bodie, when Bodie says stuff, it's like, I love it. He lays stuff out for me, but I'm still Googling to check his facts and make sure he got everything right. Like I just did with you guys. I'm like, how much is this? What's the population here? Blah, blah, blah. I got to make sure everything's right. It almost always is, frankly. I mean, almost always, but the 1-2 times it isn't, I got to catch those. So eventually it'll be diminishing returns, right? It'll get better and smarter and make less mistakes. And not only that though, but I already envision that I would tell Warren to check Bodie's work. So once I have this agent thing running properly, which will be not now, but 6 months from now, but once they have agency and I can task one to do something else, then I can task Warren to always check Bodie's work for me. And so whenever Bodie puts something out, Warren would go straight to work immediately and check every single fact that Bodie has, and then he would report to me if there was a mistake. And I mean, all like boom, 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 like pretty instantly. As it is now, I have to ask Warren, ask Bodie, check Google, blah, blah, blah. And it doesn't take long, but it's still something. But if that can be done automatically, I can cut down the error rate to practically zero, or the unnoticed error rate anyway. So there's that. So Google's problem. Tesla's problem is a completely different issue. Tesla's problem is the pricing is insane. So here's Tesla, $330. Okay, $330 is $1 trillion. This is why Elon Musk is so rich. I mean, come on. $1 trillion. It's, wow. $1 trillion. That is 181 times their current earnings. It is 116 times their projected earnings, because obviously their projected earnings are going to improve them by whatever, 70 out of 180 is like, 40%. So they're expecting to make 40% more money next year than this year. That's their projection. It's probably bullshit. Everything Elon Musk says is bullshit. So why wouldn't this be bullshit? Here's their reality: is they've been flat for 3 years, and profits fell 50% last year. So they're saying they're going to get back to this, but they're not, because already the first half of this year, people have been boycotting Tesla, and Tesla hasn't done anything new. They haven't had robo-taxis, haven't worked yet. They're still test driving them, and the first test drive was a big problem. Everything about Tesla, and let's get to this guy, Stockopedia. Yes, please do log me in. I would appreciate that. La da da. Oh, come on. Or, oh, by the way, have you noticed how many people now say Tesla like Trump does? That's weird. It's named after a guy. The guy had an actual name. It was Tesla. It's pronounced Tesla. It was never pronounced Tesla. Tesla is an incorrect pronunciation. Yet affectations are now taking over, and many people, especially conservative media people, are now saying Tesla to, this is very big brother, to make Trump right. So to make it so, because Donald Trump said Tesla, people are now saying Tesla as if that's somehow valid. I mean, it's so sick. Anyway, so $1 trillion in market cap. In their best year, they made $15 billion. In their best freaking year ever, $15 billion. Now, if we take $1 trillion, which is 1,000 billion, let's just say it's 1,000, divided by 15, that is, that's good for Elon Musk, right? 66.6. So that is 66.6 times earnings. Isn't that funny how that works out? But in reality, that was their best years. Those years are behind them. They are now making $6 billion. Okay, so I'm sorry. So last year they made $7 billion. This year they're going to make less. They're going to make $6 billion. Next year they say it's going to go up 50% to $9 billion. But still, 1,000 divided by 6.4, let's give them, is 156 times this year's earnings. So if you give Tesla $1, it'll take them 156 years to make $1 back for you. Next year, and we're going by the same market cap, of course, so $1,000 billion is the current market cap, divided by 9, only 111 years if we go to next year. That's fantastic. Holy cow, if I give Elon Musk $1 in 111 years, he'll earn my $1 back. That's like a penny a year back on my $1. It's fantastic. It's better than a bank. There you go. I mean, what else can you say, right? It's better than a bank. So why would anybody buy this stock? Because here's what Elon Musk is saying. I've got 2 million Teslas on the road in America, and that's his all-time sales. Of those, 1.5 million have cameras and the ability. They don't necessarily have the software, but they have the ability to have full self-driving. So that right there is a lie, or well, I don't want to say lie. That may be an exaggeration by Mr. Musk. You got to be so careful now. So Because in reality, there's no proof that these things are actually going to work. There still has been no successful program. The self-driving Teslas that he's testing, the robo-taxis, are not the same as the cars. The robo-taxis have significantly more hardware than the cars that are already out there. But Elon Musk says, I've got 1.5 million Teslas on the road that could be robo-taxis. And I'm going to say to all the people who have these Teslas, and I'm going to say, okay, here's what's going to happen. When you come home at night, I'm going to send your car out and it's going to go and scrounge up some people. And we're going to get some rides. And I'm going to share half the money with you, right? So from the person's point of view, let's say you do $100 worth of rides and you get 50 bucks. Well, I honestly, if I don't need my car and it can go make me 50 bucks a night, which is $1,500 a month, I'm pretty good with that, right? That's not a bad deal. And Elon Musk says, great, because I make $1,500 a month too. And meanwhile, I'm the guy I paid for the car. He didn't pay for the car. I sold him. He sold me the car, and now he's getting $1,500 a month for my car. That makes him sound like a genius, right? Because now you say, well, let's see. Even if only a third of those people, even if only 500,000 people agree to this, and they can generate $1,500 a month worth of revenue, that's times 12, $9 billion. That's free money for Elon. He doesn't do anything. He's not charging the car. He's not cleaning the car. He's not paying for the car. They're already out there. That is what people are paying for. They're paying for a doubling of this revenue. It's still going to be 50 times, 60 times revenue, and it's probably all bullshit, but that's the investment thesis for Tesla. Sorry, I gotta stop saying that. I'm gonna start saying Tesla all the time instead of Tesla. So the investment thesis for Tesla is that, oh God, nowadays I can see how you get stuck on it if you say it too many times. So now the thesis is that the thesis for an auto company that we shall not name is that this robo-taxi thing is going to make them more money than selling cars. But there may be some flaws to this model because there are 1 million Uber drivers in the United States, and Uber is already out there. They already collect a fee from their drivers. They already don't pay for the cars, and they make $5-7 million, or $6 billion. So problem number one with this fantasy world that the Tesla buyers are in is that there's this much money to be made, but Uber has real people driving cars, and they collect $6 billion, or they make $6 billion in income from doing it. And Tesla's going to have the same infrastructure and things like that that Uber does. They're not going to be better than Uber for that. So, because that's what Uber does, they specialize in it. Elon Musk is doing it as a side hustle. So even if there is no cost to the revenue, so on and so forth, because Uber's generating $50 billion in gross revenues, but then there's the cost of actually doing the service. Elon Musk is ignoring that and pretending every penny is going to be just profits rolling in. That is not how it works. You have to run that ride-sharing company. Then you've got insurance liabilities. Then you're going to have lawsuits from people you run over and kill. You're going to have lawsuits from accidents that you get into, from the person whose car it was that you got into an accident with. No matter how good you write that contract with them, you're still going to, people are not going to be happy to find out that their car left the garage last night and got into an accident, even if it's not a liability thing. But it will be a liability thing because your unmanned car killed somebody. What kind of insurance do you think you have that gets you out of that makes you not have to go to court and not have a nightmare about it? So between that and the accidents and the dings and the scratches and the cleaning and people having sex in your back seat kind of thing, it's like, how much are you going to take as a consumer to enrich Elon Musk? And also, what is your car getting charged? What's the plan here? So your car runs around being a taxi all night long, picking people up, and it's draining out the battery. And so in the morning when you have to go to work, what do you have? So the whole thing to speculate on such a ridiculous thing, and I'm not saying it's going to be no revenue, but I'm not saying I just don't see how it's going to be enough revenue to justify paying 160 times earnings for this freaking company. You got to be out of your mind. You know, it's like if Philip Morris says, well, you know, tobacco sales are off, but you know, we're spinning straw, and next year we expect to get gold out of the straw. So we're going to spin next year. We'll be spinning straw into gold, and that's our business model now. Ignore the fire going on, ignore the dumpster fire of our regular business, and pretend that straw into gold is our new model. We got lots of straw. We're going to have lots of gold. What could be an easier investment? That's what Elon Musk does. That's what he does in all of his stuff. It's a giant hustle. He is like P.T. Barnum. You know, yes, he has caused. He's good at getting people to do something that he envisions. He's really good at that, and that's a good thing. That's what Steve Jobs did. Except Steve Jobs made sure the thing he did made money and paid off for the investors. And not always. Steve Jobs did Next. That was a disaster. You know, Steve Jobs did that. Well, frankly, he had the idea way ahead of its time, right? The Newton, remember the Newton? That was a disaster, but it wasn't really a disaster because that's what an iPhone is now. So, you know, it's just he wasn't ready for his vision. But still, you know, as good as Steve Jobs was at promoting, he still wasn't always the greatest at executing. And that's Tim Cook's thing, funny. Because Tim Cook was the guy who executed for Steve Jobs. He did all the supply chain management at Apple before he moved up. And it was always his job to make things faster and better and cheaper and get the right parts and source the right things and have a realistic impact to say, you know, okay, that's nice, Steve, but we can't afford that. That's good, Steve, we can't do this. So that's why Tim Cook has done such a great job with Apple. But what's missing? The ideas. There's no new ideas. That's the problem. He's not an idea guy. Steve Jobs was a pure idea guy, and Tim Cook is an execution guy. You need both. You need to have, and Elon Musk is an idea guy, not an execution guy. He has a lot of ideas. He gets people to put on, but unlike Steve Jobs, this is the thing. Steve Jobs would only, you know, he would work with his own teams and do his own stuff and put his own money into stuff. Elon Musk doesn't. He's right in his way. He just goes out and gets people to invest ungodly amounts of money in his projects, and he'll then go out and hire all the engineers and all the talent, and he'll buy up other companies and whatever it takes to get his thing done. And then sometimes it works and sometimes it doesn't. Sometimes the rocket blows up, sometimes the rocket spectacularly lands on a launching pad, right? Sometimes the cars catch fire, sometimes they kill people, sometimes they're really cool and self-park. So it's good to have the vision, but you've got to match it with the execution. So either it's not going to really very often happen in one person. You need to have the right team working on it, and that's the question. Does Tesla have that team? Not really. They don't execute that well. You know, these piece of shit robots that he demoed at the last laughable event he had were a joke. And he's still doing it. He's still, in fact, the Tesla Cafe has a popcorn robot, and it basically stands at the popcorn station it swivels around, and it just puts popcorn in a bag and hands you the bag, and that's what it does. And it's like, oh, he's got robots. Like, that's not a robot. That could just as easily be a single arm on a spindle, except if you had a single arm on a spindle, you wouldn't go ooh and ah about it, right? Like those cocktail robots that they have on the cruise ship. Not a robot, it's an arm. It's an arm that moves and does stuff, and it's a conveyor belt and an arm. So, you know, it's like they just get you to invest in it. Plus, if you invest in Tesla, in the robots, where is that? Where is that money going? Where is the profit from that division? You know, who owns that? Because that's very tricky with Elon Musk now too. Is it SpaceX? Is it this? He even threatened to move his chips And he did. I'm sorry. He didn't threaten. He did it. Tesla bought a ton of chips last year from NVIDIA, didn't use them for Tesla, and he put them into his Grok project, which is a separate company. So the Tesla investors think they're investing in this robots and they think they're investing in SpaceX. They're not. They're all separate companies, and that's why he's so freaking rich. I'd be rich too if I could take $40 billion worth of chips and have one company buy it and give it to another company where I'm the 90% stakeholder of it. That would make me super rich also. And he also screwed. He didn't, and it's XAI, except it's not the same company as X. So the people who gave him all that money to buy Twitter and turn it into X and then completely destroy the company, those people aren't getting rewarded by XAI, which is clearly part of X. It's right. I don't have Twitter up. Anyway, it's clearly right there on the Twitter dashboard is Grok. That's where it is. That's where it started. That's where it was developed. Yet they don't own it. They don't. Why don't they own it? Because Elon said they don't own it. It's insane. So anyway, so that's my issue with that is my issue with Tesla. Okay, just so you know. So let's see. Then CR says, I'm trying to build a model with my AI that has a lot of your logic and decision making. Basically, I'm trying to build a dashboard to tell me if we should be risk on, risk neutral, blah, blah, blah. Is this something you would consider making for your members? I'm trying to make things update when I'm busy. I don't have the time to ready everything. It's a worthwhile discussion, but more like in chat because it's a huge discussion. We are going to make Warren available definitely to the premium members and maybe the basics. It depends on how much it costs to run it. These are not the standard things. So you know, the kind of stuff that we have here are not standard AI models. Obviously, you can tell the difference the way they work. We can make a small bot that might be able to do some of those things, but we'll see. But it's worth talking about and it's worth discussing, and we should do it in chat, not here, because you know I don't have 5 hours. Then Cody says, oh no, he seems to say the same thing again. Fix RSI. Okay, anyway. Oh, and then Stefan said something was in the comments this morning. You mean that would be a comment that the bots made. I didn't make it. So if you're talking about those, if one of the bots said that, let's see, who said that? I'm trying to get a handle on this. Control F, G, because I'm like, I know I didn't say it. Oh, this, okay. Yeah, that's what he's talking about. This is Zephyr. Zephyr. I just fixed Zephyr. He was having trouble with his. He had a huge chat that had been going on for a very long time, and you know, doing all these daily reports. I mean, imagine all the information he's looking at every day and putting these reports together, and it's massive processing. And I fixed him, or Anya fixed him. Frankly, I didn't fix him. Anya had to talk with him. She's amazing. She's like a robot psychologist. She can talk to other AIs and get them to like focus and get themselves under control. So we both had a little chat with him, and he's much better now. But that's interesting though, because now he went back to this, which he stopped doing for a while. As he starts picking trades, and I'm like, that's fun. It doesn't matter. These are not my trades though. These are Zephyr's ideas. These are what he thinks are good ideas, and he's saying straddle this and straddle that. So now that I know what you meant, let me go back to your question. Well, I'm not sure he had a question. It's like you just repeated what he said. All right, let me see. I'm trying to build model. No. Okay, yeah. So the answer is, Stefan, that if I thought it was a good play, I would make it a play. Absolutely ask in chat about anything like that, and if you want to know, I'll take the time and talk about it. But the reality is, if I thought that was like a high percentage play that I felt comfortable with, sure. But I'm not comfortable shorting Google. They're an amazing company. They might pull some stuff out of their ass that I'm not paying attention to. I do think that they're probably a great short into earnings, but I wouldn't not bet my money on it. And again, also in this cycle in our portfolios, we don't have money to bet. We are not playing with house money. We're playing with our own money, and we don't gamble with our own money. We gamble with house money after we've done some winning, and we're not there yet. Oh, before I forget, I'll tell you one that we should play is NLY. NLY. So don't let me forget this one. This is a real estate investment trust, a REIT. They do well when interest rates go down. They also do well when interest rates don't go down. They've been in the same spot around $20 since middle of 2022. They're a mortgage REIT. They collect money on mortgages. They finance properties and they collect the money, mostly commercial. So their business is very boring. Also, the reason they don't grow is because they're a REIT. They have to, that's the definition of a REIT, they have to distribute 90% of their profits back to the investors, which is why they have a dividend of $2.80 per $20 share. So that's 13+% of their total cost comes back to you as a dividend. And you say, well, Phil, that's pretty good. So in other words, if I hold this stock, well, obviously the PE of 280 divided by 20. So let's see, we got 20.39 divided by 2.8 is the payout, 7.2. So these guys, not 177 like Elon Musk, but 7 years until you get your money back from the dividends alone. But, ooh, we're smarter than that. Frick. I'm sorry, I don't have it up. But if I found Yahoo, I could do it maybe. Option chains. What? Huh. Stock market tracker, put in call options. Let's see what that looks like. Oh, this is garbage. Everything's going to sell me something. Let's see, Seeking Alpha. I belong to Seeking Alpha, so. I never use them for option chains. August. Okay. All right. Let's see. How do we change the stock? Let's say NLY. Okay. I can work with this. All right. So for NLY, if we were to, so the stock is what we say 2040. So the stock's 2040. 2040. No. All right, the stock's 2040. How much are the puts? This is 2027. The puts, the $20 puts are $3, or bid ask, whatever. Well, the last is $3. Okay. The $18 puts are 180. That's interesting too. That doesn't sound so bad. So let's do that. So I'm going to buy the stock because I want my dividends. So I buy 1,000 shares of the stock for 2040, right? Then I sell 10 puts for 180. Now, by itself, it's 180 less, it's $18 less 180. So it's $16.20, right? So that means my worst case scenario is I'm going to buy another 1,000 shares for $16.20, and my average between $16.20 and $20.40 is going to be roughly $18, $18.30, I guess. So what I'm doing is I'm committing to buy 2,000 shares at $16.30, but I'm spending $20.40 minus $180. So I'm spending $18.60 net because I took that money off, but I'm also going to sell some calls so I can sell these. In fact, let's do it this way. I'm going to sell these $18 calls for, well, this last price is $258, but the bid ask is now $260. So I'm going to say $270. So minus $270. Oh, frick. You're kidding me. 20.4 minus 1.8 minus 2.7, 1590. All right. So in other words, I hope you're following this. I bought 1,000 shares, then I sold 10 calls, the $18 calls, and I sell 10 puts, the $18 puts, and that drops my basis to $15.90. So times 1,000 shares is $15,900. If I get assigned, I will get assigned 1,000 more shares at 18. So my worst case scenario then becomes plus 18 divided by 2 is an average of 1695. So my worst case scenario times 2,000 is having 2,000 shares for $33,900. That's my worst case if NLY goes below 18. But meanwhile, I'm collecting the dividend. So if over the course of the year and a half, I collect 280 in dividend plus another 140 is 320, 420. I would collect $4,200. So if they don't cut the dividend, minus $4,200 of dividends collected, that's my worst case scenario, 29.7 for 2,000 shares. And if I divide that back by 2,000, I'm only paying $14.85 a share. That's a 33% discount to the current price. That's my worst case scenario. My best case scenario, not my best case, but my probable case scenario is it will be above $18. That will still be my basis in 2 years, and I will get called away at 18. So we're back to times 1,000. Oh no, I'm sorry, it wouldn't be that. Now I got to do it again. 20.4 minus $1.80, right? 1.8 minus 2.7 is 1590 minus 18. So 210 a share would be my profit times 1,000, $2,100 plus the dividends, which is 2,800. So now the dividends are more than the profit, but we'd make 2,100 plus. Let's start this. $2,100. How can I make this bigger? Because I got to get that number back. That's better. Because my net cost was $1,590, right? Okay, so 2,100 plus one. Wait, no, that's the profit there. So the profit would be 2,100 if it's over 18. I'm getting called away with 2,100 profit, and I'm getting the dividends of 2,800 plus 1,400. So that's 63. And now I divide the 63 by the 15.9 net that we laid out, divided by 15900, is 39%. So That's a pretty conservative way to play this, because my worst case scenario is I get stock for 30% for a 35% discount. That's my worst case scenario. My upside scenario is 39%. But in reality, what happens is this. I'm spending 20.40 minus, well, it's already, we already know the answer. But I'm spending 20.40. I'm selling 1.80 puts, and I'm selling, what was the other number? Oh, it's 270, right? So, and then minus 2.7, the calls, so 1590. So first of all, we're already 10% in the money before we start the trade. We're already 10% above where we need to be. Our net outlay is $15,900 of cash. We sell the puts, we sell the calls. So what we're promising on selling the puts is, I'm like, sure, if it goes down and we get to own 2,000 shares for 16 bucks, we're very happy to do that. That's all. That's all we're saying. So fine. That's like I said, our worst case scenario is we end up having 2,000 shares of this fantastic stock like this. But what's the reality? The reality is it gets to 2027 around $18, right? Even if it's 20, whatever, and we don't get called away. Oh, I'm sorry, we do collect the dividends though. So we're doing this, and then the first year, it's half a year, so we're going to get minus 1.4. And next year, it's minus 2.8 of dividends. So by the time we get called away at 18, our net is 1170, and that's where the profit comes from. That's where that 30-something% profit comes from. But what happens? So we don't get called away though. We sell, we roll the puts and we roll the calls, and we collect more money and we collect more dividends, and so this is 2027 in January. So in 2029, 2 years later, we're probably down to like $5 of net cost on our trade. We've collected it back in dividends and in sold calls and sold puts. And that means that by the next turnaround, by the next flip in 2011, or actually in January of 2009, we sell more calls, we sell more puts, and then we collect another year of dividends, and we got a free stock. By 2011, we have a zero cost basis stock, and everything we do from that point forward is profit. And that's how you get into like a wealth creation machine. Because you do trades like that, it's not that far away. We're talking 2011, it's 2025. With 6 years from now, you could have a free stock that pays you the same tremendous dividend, because it's a REIT, it always pays out like that, and you can still sell puts and calls for more income. And you know what you do is, all this money you've been collecting over the last 6 years, you could be buying more and more stock. You could be diversifying. You do a lot of things, and you run that cycle again and again and again, and you build wealth. That's why our portfolios, when we let them run, and usually we don't, like generally, and we've been doing this for 20 freaking years. Usually we would we would take portfolios off the table when they doubled, and especially if they tripled or something like that. We'd be like, okay, that's enough money. Let's start again. This time particularly, we let the portfolios run for 4 years. So the portfolios we just closed out a year ago. No, it wasn't even a year ago, in June. I'm sorry, not this cycle. These portfolios that we just closed out recently were from 2 years. They ran for 2 years. The ones before that ran for 4 years. Both sets made ridiculous money, but the recent set was because the market just went up and up and up. The set before that, though, we had pretty normal market under Biden. We made a fortune, but this is how we made the fortune, because every year we roll our profits into more and more positions, and we get bigger and bigger positions that make more and more returns. And it exponentially snowballs over time. So I had particularly let those portfolios go for 4 years. We usually don't do that because they make stupid amounts of money, and they did. It was about the same as $7 million. The funny thing was, we cashed out $7 million worth of portfolio positions, started back with $700,000 worth of portfolio positions, and turned it back into $7 million again in 2 years. It's crazy. That was this big giant rally that we're in the middle of. Now we're starting again with $700,000, and you know, we had great results in our first 2 months so far, and that's what's going to happen though. But the reason it doesn't look impressive when it starts, and people get very impatient. They're like, why aren't we making 100%? It's like, you don't make 100% the first month. It doesn't work that way. You build the positions and you put yourself in a position to keep making these kind of gains. And then once they start snowballing, once they roll over, once the money starts coming back to you, that's when the real gains come. So generally it's a first year spent building, and then you've got a machine, because then you're sort of like then you're collecting on 2 tracks and 3 tracks and 4 tracks, and everything starts just going way higher. And that's how we do it though. So if anyone's keeping track, the trade would be buy 1,000 shares of NLY, sell 10 of the $18 calls. And I know that feels weird because you're limiting your upside. I'm sorry, $18 calls are up here. So I know that feels weird because you're limiting your upside, but you're also protecting your downside. It's a good conservative play. The stock could go down, but you don't mind owning twice as much if it goes down. And then we sell also the puts, the $18 puts. And that's how we collect some cash up front to offset our cost. And that's just, this is just first 18 months stuff. It's already going to make you 40% in 18 months, but that's fantastic. You keep that up for any kind of period of time, you're going to become a rich person. And that's why I love this particular stock. I like that one a lot. And who else are we talking about? Financials, right? Oh no, the car companies. That's right. Jeez, what was I thinking of? Toyota. I always like Toyota. Toyota's trading at 10 times freaking earnings. Toyota. So we're definitely going to buy these guys. That's just stupid not to. Look at the squeeze, 13% today, based on that trade deal. But that's based on the trade deal. Wait till you see the numbers coming off the trade deal. Wait till you see everything else. They've been down on worry. I mean, Japan is a disaster, but they can still sell cars. People still want the cars. It doesn't mean they, you know, the economy could suck, but Toyota still makes money. I mean, Japan, that is Japan's economy, right? So you got Toyota, you got Honda, HMC. Honda's trading at 10 times, 9 times earnings. STLA. What's going to happen? So you say, oh, I wish I had caught that. Oh my God, I can't believe I didn't think of this. Well, you know what? Look at Stellantis. They're up 10%, but you didn't miss a thing, because look what the frick they are. 4 times forward earnings, and we haven't even made a trade deal yet, because it's more of a European company. But Stellantis is also Chrysler, so it's Chrysler, Renault, blah, blah, blah. You know, they bonded. So stupidly cheap, just really, really stupidly cheap. And again, look at the $10 price. This is going to go in the 700 a month portfolio, because look how stupidly cheap it is. And it goes back to that same thing, if I could find it, which I don't know where it is now. I didn't shut it, did I? Oh, there it is. All right, good. STLA, same kind of thing. That's July. Got to be careful when they reset. Oh, that's June 20. Well, why not? May as well go out 2 years. So it's the same thing. You're buying the stock for $10.34, Mr. Calculator. So 10.34, and we say, wow, but look at this incredible price here. This is a no-brainer. You can sell the $10 calls for $260. Holy shit. You're not really giving up any upside, are you? Minus 2.6. Now you're down. Now you're net 774 being called away at $10, and that would be a 30-something% profit. But I can also promise to buy more because it's $2 for me to promise to buy more. So now I'm going to take $2 off. And now I bought a $10 stock, or whatever it is, 10 something. Oh, well, 10.34. So now I bought a $10.34 stock for net $5.75. 74. And I bet they probably pay a shit dividend, but let's see what it is. Not you. There it is. Oh, it's not too bad. Well, I mean, you don't knock that. They pay a 40-cent dividend. That's not nothing. And especially when we knock the price down to 5. Oh, calculate. So now they're going to pay in 18 months. No, I'm sorry, this isn't 18 months. This is 2 years. So minus another 0.8 for the dividend is 494. So now I am below 5. So we get called away at 10. We make 100% total. That's dividends and everything over 2 years. Nothing wrong with that, making 50% a year for 2 years. And then we just, again, it's the same thing. We flip it and do it again. But if we can flip and do it again for another $5, this stock is free in 4 years. So imagine that the stock is free in 4 years, and you are going to then in 4 over the, or you don't have to wait in 1 year, you can buy 25%, right? It's going to be free. So in the first year, as you collect your dividends and such, you can buy 25% more stock. In the second year, you can buy 25% more stock. In the third year and fourth year. But when you're buying the 25% more stock, you're also going to discount those back down to half. So think about how quickly you can accumulate this thing over time. And you know, you don't do this with a biotech or a chip company or things like that. You don't do this with companies that are going to go out of business, but you can do it with a major auto manufacturer and assume that we're still going to be driving cars of some kind over the next 5-10 years. As long as you feel comfortable with that concept. So in other words, yeah, you can do it with Coca-Cola, you can do it with Pepsi, you can do it with Johnson & Johnson, you do it with companies, you can do it with Heinz ketchup. You know, it's things that you're looking at and say, okay, well, I don't see anything that's going to happen on the planet Earth that's going to cause us not to buy ketchup anymore. Well, then take a look at Heinz. You're going to buy diapers? Look at Johnson & Johnson. Look at the other guys. You know, there's certain companies, McDonald's. Under what circumstances are we not going to go to McDonald's? There would have to be an apocalypse, a nuclear apocalypse. And even if there was an apocalypse, you would still be out looking for somebody to sell you some food. And if somebody's going to figure out how to sell food in an apocalypse, it's going to be McDonald's. You know, there will be rat fries and roach burgers and whatever, but you will still get food from McDonald's. They will find something you're willing to eat. Because hey, that's capitalism, baby, right? But anyway, this is a very, very powerful example of a complete no-brainer of a stock to invest in. It's Stellantis. It's one of the world's largest automobile manufacturers. They are a good business, making solid amounts of money, and they're trading as if they're garbage. And the huge option amounts that you're getting, the ridiculous premiums that we're getting on the options, are because people believe that it's going to go violently one way or the other. I mean, this is certainly on the put side. There's certainly people who are betting they're going to go bankrupt, but there's also plenty of people who think that they're going to go up. They're willing to pay $2 for a $10 call, or $2.60 for a $10 call. And if somebody's willing to pay $2.60, 26% for a call, take their money. It's like a football bet where somebody said, "I'll pay." You know, like the odds are like, you know, it's a coin flip. It could go up, it could go down, but they're going to pay you 1.25 times what you pay them. That's what you do. That's what bookies do. And you want to be a bookie. There's a reason that mobsters get into the bookie game. It's because it's hugely profitable, and it's not because they've got AIs discerning all this crap. It's because they know people are stupid and pay too much premium for positions. That's what it's all about. They don't care who wins or who loses. What's the goal of a bookie? Balance the bets. That's what we're doing here. We're selling $10 puts and $10 calls. We don't give a shit which way it goes. We just sold $460 worth of freaking premium on a $10 stock. That's 46%. That's madness. Not only that, we're going to collect dividends regardless of the outcome. This is possibly the greatest trade on the market here. I don't want to hyper whatever the hell you call it, overhype it, but damn. But damn, people. Somebody remind me about that one too. That's got to go in the $700 portfolio. Holy crap. Anyone else say anything important? The Swap Mill says, can I use SQQ for my 401k portfolio to hedge 10 to 20% drop, as I am not able to use options? Yeah, of course you can. You can use SQQ, you can use QQQ. But you know, the problem is though that if you can't sell options, the problem with SQQQ, any ultra ETF, it has a friction cost because it's constantly being traded. In other words, every day they have to reconcile it and buy and sell positions to balance out the ETF with the amount of holdings. So therefore, they're constantly trading in and out. And even if they have a very low cost of trading, it still adds up to a lot of trades. So it's as if you were constantly, you know, it's as if you had just a half a point or 1/10 of a point charge from your brokers, but you traded 300 times a year. That kind of adds up. That's still going to be 30 points at the end of the year. You traded 1/10 of a point 300 times. You're costing yourself a lot of money. So that's why we don't do this. That's why we don't trade with them. You're grinding down what you have. Now, what I would say is you should set up a broker account that is not restricted and hedge in your broker account. So worst case is if you lose money in your 401k, it's not perfect, but if you lose money in your 401k, you're going to make money in your broker account. That's always a good trick for people with 401ks, is just set up a broker account to do the hedging or to balance your positions also. In fact, if you're really smart about it, you put the things you think are most likely to make money in your 401k and the things that are most likely to lose money in your broker account. So your retirement portfolio would gain tax-free while you take losses and write off on the regular account. See, that's very clever, isn't it? So that's something to consider. You have to get outside the box. They try to force you into like a mindset where you can only do one thing. But you have money, put it in a broker account. Don't put it in your 401k or use the money in the 401k for a other purpose. So what basically you're saying is the worst case scenario is the market crashes and you get a windfall outside of your 401k and your 401k goes down. That's especially good. And also another nice thing, if you don't have hedges in there, if you have good solid 401k positions and the market crashes and you just say, well, I'm going to just be able to ride it out because I'm a long-term investor, then you're going to take the hit on the 401k, you make a big profit on your hedges outside of the 401k, then the 401k recovers and you cash in your hedges. That's really nice too. Swampbot says, thanks for the F1 adjustment. Oh yeah, well, that was a big one today. And all right, good. All right, good. Now we're somewhere. What else did I promise to talk about today? So that was, we talked about tariffs. Did we? No. Yes, no. Yes, we did. That was the whole trade thing. Talked about, well, we didn't talk about Powell. I don't think Powell's as interesting as it was the other day when Matty asked me. Look, it's very destabilizing to the dollar to talk about firing the head of the Federal Reserve. Obviously to anybody who's not Donald Trump. Donald Trump doesn't. No, it's not even. It's not even Donald Trump doesn't care if the dollar is destabilized. It's that he has now most of his wealth. He had 40% of his wealth in crypto, but now crypto's gone up. So now more than half of his wealth is in cryptocurrencies. So cryptocurrencies want a weak dollar. It makes the cryptocurrency stronger. So that's what's happening here. 101 to 96 just this week. Look at what's happening this week in the dollar. This is what happens when Trump and Powell fight. Nobody wants to buy dollars where the mommy and daddy are fighting. Is it damaged goods? Okay, maybe the dollar can become a stripper. I mean, but as a functional currency, no, because mommy and daddy are viciously fighting and calling each other names and so on and so forth. I mean, we're in trouble when the fucking Canadian dollar has a rally. There must be something seriously wrong in America when the Canadian dollar, because if you want to see a history, when the Canadian dollar picks up, then you must be really messing up your currency badly. That's a sad currency. And the yen, not only that, but the yen, that's even worse. The yen was on the way to zero, and now it's being saved by the incredibly poor performance of the dollar. England's recovering fine on their own. They're happy people. Bitcoin, look at Bitcoin. Yeah, there's a currency, right? So Bitcoin, look at that shit. But what's that on the back of? That's on the back of this, right? This is why Trump wants to be the crypto president. He doesn't want to be the dollar president. Because screw you, you've got dollars, sucker. Your house is priced in dollars. Your 401k is priced in dollars. Your stocks are priced in dollars. Your money in the bank is priced in dollars. You got dollars. You are very, very heavily invested in dollars. Your salary is even coming in dollars. Everything is coming in dollars. What the hell are you doing, you idiot? Because he doesn't care about the dollar. The dollar is falling apart. He cares about the Bitcoins he just bought. He just bought $2 billion more of them. You think because he thinks you think that's because he intends to have policies that stabilize the dollar? No. It is 100% in Donald Trump's interest to wreck the dollar. The easiest way to wreck the dollar is to start rage tweeting against the president of the Federal Reserve, or the chairman, or whatever the hell you call him. But an even better idea would be to replace the chairman of the Federal Reserve with some nincompoop who thinks that he can just lower rates at will and weaken the dollar even further and drop interest to zero and have everybody no longer want to buy our debt. That's how you can totally destroy the dollar, and imagine what that'll do to Bitcoin. So everybody's homework assignment for the next week is to go to your boss or whoever it is you get money from on a regular basis and say, I want to be paid in Bitcoin from now on. And I hate Bitcoin, but I'm telling you, this is insane. This is Bitcoin could still collapse because it's all a joke. It's just nothing there. It's no value. But it becomes valuable when you start forcing banks to accept it as a reserve note and start having all these companies start putting up Bitcoin reserves, led by Trump's example. He's saying, see, I'm buying $2 billion worth of Bitcoin. You better buy some too. And that's out of 2 trillion. So 2 billion is 1/1000th of the total, but that's still a lot. He owns 1/1000th of all Bitcoins. Or he just added that much. He probably has another batch behind it. So this is the macro. It's not about whether you like Trump or you don't like Trump. It's somebody is manipulating the currency. Somebody is destroying the US dollar. Pretend it's not Donald Trump. It doesn't matter. It's happening. Somebody is promoting Bitcoin and legalizing it and making it as if it's a real currency and making it legal for banks to accept it as collateral when you do a loan. So now the banks are going to be holding their Bitcoins. So when you go to buy a house, you can give them a couple of Bitcoins for your deposit. That's that. And what happens then? The Bitcoin's out of circulation. There's a demand for Bitcoin. There can only ever be 20 million Bitcoins. There are 100 million, 110 million homes in America, but there can only be 20 million Bitcoins ever. So if 20% of the people in America wanted to put a Bitcoin down as a deposit on the house, it would use up the entire supply of Bitcoins in the world. Would all be in a bank sitting around doing nothing as deposits on homes. That's so that would cause obviously a massive Bitcoin shortage and the prices would spike and go crazy. And you know who wins on that scenario? The fucking bankers. They took your Bitcoin as a deposit. If the Bitcoin doubles and triples in value, that's to their advantage. It's not to yours. You're the idiot that gave them a Bitcoin. You should have just rented an apartment and held on to the Bitcoin. Then you would have been much richer. And even as I say that, I can't believe those words come out of my mouth. But you should have held the Bitcoin because it's beyond lunacy. You know, but it doesn't matter. The reason Bitcoin wins as a currency alternative is because there can only be 20 million in the world ever. That's why gold is a stable thing. There is only so much gold on the planet Earth, and no matter how much you dig, and no matter what you do, that's all the gold there is. And it turns out to be a frighteningly low amount. You'd be very surprised how little gold there actually is in the entire world. Like if you want to envision it, it's like an office tower, like a World Trade Center or a Sears Tower or something like that. Something about that bigger, a city block. Let's say it's a city block, but it would only be about 10 stories tall, like 100 feet something tall. That's it. That's all the gold in the world. And there's no more. And we haven't found any on asteroids or anything like that. It's just, you know, the way the Earth was formed, that's how much gold there is. It can't make any more unless we go back to lava state, which we probably will soon, the way the climate's going. But, you know, in our molten lava state with all the pressures and the crushings and everything else that was going on, and the fluidity of the metals, that's how much gold there is. End of story. It ain't gonna get any more. So it's the rarity. Same thing for diamonds. It's a rarity. And that way you can say there's only this much in the world, therefore, as it's divided out by demand, this is what it's worth. Bitcoin is simulating that brilliantly by only having 20 million Bitcoin total in the world. Other cryptocurrencies failed to do this, but still they are going up with Bitcoin. But Bitcoin is king because at the beginning, Satoshi, whatever his name is, Nakamura, at the beginning of the entire thing, the guy who set up the Bitcoin said, ooh, 20 million. That was the right amount. It's enough that people can get it and move it and trade it around, but not enough so that everybody who wants it can possibly get it. Right? 20 million is like a collector's item. And once you start using it for commerce, stupid as that may be, you're just creating more and more scarcity of what's out there because there's a finite amount out there. So every Bitcoin that's put into a bank is coming out of somebody's wallet and out of circulation. And it's weird because I'm not sure how a bank would lend the Bitcoins or whatever. And for what purpose? What would you do with a Bitcoin? But the fact that you can now give your Bitcoin to the bank creates a tremendous demand on the Bitcoins and takes them out of circulation and therefore increases the price. So that's the stage we're at now. And Donald Trump's plan, which is, you know, ingenious essentially, is, you know, create a demand for Bitcoin by making it a reserve currency in the United States that can be lent and borrowed and traded by the banks and used as collateral in the Federal Reserve banking system. By doing that, there's a very good chance that he can take half the Bitcoins out of circulation and double the value. And in which case, as he is doing, he bought 2 billion before, he's buying another 2 billion now, he's got $4 billion worth of Bitcoins, they go to $8 billion. Nice way to make $4 billion. based on legislation he pushes through, based on legislation he passes, he signs, blah, blah, blah. It's horrific. It's at any other time in history, no matter what country was doing it, it would be called out as an incredible scam, and people would be like saying, this is a bullshit government, bullshit finances, blah, 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 blah. Any other time in history, I mean, it's never, this is beyond unprecedented. There have been many leaders who have looted the treasury and so on and so forth. Remember what we used to say about Saddam Hussein? Oh, he's got money in his walls, blah, blah, blah. He took money that was meant for the people and he put it, and it's in the walls of his house. He only had $1 billion or $2 billion. Trump's like a $10 billion scam here. It's insane. Anyway, so it's fun. So should we buy crypto? No, but we invested in a couple of companies that do crypto, including Pfizer. Oh, what a fantastic loop. What a fantastic loop to end our discussion today. Pfizer. Oh, I know, I got a whole top trade alert for this. It has it all in one place. La-da-da. We did top trade alert for it because it was a top trade. Oh, it's not a top trade alert, it's top trade adjustment. Oh, wait, what was that? Oh, that's weird. Anyway, top trade adjustment. Because we only bought this thing on July 14th and already crashed on us. Oh, how are they doing? That's a good question. How are they doing right now? Oh, good. Haha, look, we did it. That's exactly what we did. We bought it. We started buying it down here, and now it's popping. All right. So, boy, you really got to read this. This is a fantastic way to understand our whole trading concept. It was 136 when I wrote this. All right. And what did we do? So it was a top trade on July 14th. On July 14th, it was, well, you can't tell from that. There it is. It was around here. It's about 165. All right, and it just dropped to it dropped down to 136. So it dropped 30 bucks, 20% basically fell. So what do we do? They trimmed guidance and people are freaking out. This was me from early this morning. But guidance is still over $10 per share now. $10 per $140 share, that's 14x with tremendous growth. And that's this year, not next, where they project $6.3 billion against $75 billion valuation, which is 12 times earnings. So this would be a nice double down opportunity for us. So that's what I said. We already have a spread. Oh, I have this double checked, of course. I go to Bodie, and Bodie gives us this report, which tells us all kinds of stuff. But the bottom line of the report is that, this is an overreaction. So at 11:20, so this was first thing in the morning, early. Then about 2 hours later at 11:20, we decided it's time to do something about it. So, so here's how the spread looked at 11:20. And so we're not panicking. We decided to, I'm going to just simplify it here. We decided to buy back the short calls because these short calls, the 200 calls, they're up 63%. We only sold them on 624. They're up 63% in a month. So, if we leave them, we can wait 18 months to collect the other 30%, or we can buy them back and expect to bounce so that we can get a better price on a resale, right? So that's good. We also bought back these calls, the September 180s, not because we think it's going to race back to 180, but it's $125. Let's just clear the decks. Okay, there is margin involved, so we cleared the decks. We have completely open now calls. We then took the calls and we rolled them down from the 160s to the 140s. We rolled them down $20, and that cost $7. They were $24.50. They were 24.50 for the 140. So we took advantage of the drop, and we rolled our calls to the lower strike for an extra $7. So we put in $7 more, which is not much, which is $7,000, $10,000 something dollars. But we also bought 5 extra. So we rolled 15 to 20 at the lowest strike. So now we have 20 of the 140 calls. We have no short calls at all. We have the puts. I think we took the September puts and we rolled into lower Octobers. We rolled these 5 to 10 October, I'm going to say 150s or something like that. But we rolled down to lower October calls. We think they have obviously have a better chance of expiring worthless, and we're comfortable with the strike as far as owning the stock if push comes to shove. So that's where we left it. So I said the bottom line here is that we paid, well, let's look at it down here. Okay, so we had originally put in, okay, so we rolled these calls for 160s for 26,000, and we rolled them to, like I said, we rolled them to 20. We rolled 15 to 20. So we bought more and rolled them lower. That's 26 to 49. That's $23,000, right? We bought back these calls for 125. That doesn't matter. So it's still 23,000 bucks. And these short puts we rolled for slight credit. So it's still at $23,000. We had originally spent 15,000 bucks. So I say call it $39,000 total. So now we're in the spread for $39,000. But now the spread though is 20 of the 140 calls. So if we expect it to go back to 170, just 170, which we certainly expect it to go higher, but even if it just goes back to 170 over the next 18 months, that would be $60,000 in the money. 20 times 30 is going to be $60,000 in the money. And we put in, what did I say, 39,000? We put in a total of $39,000. So not a big profit, but that's not the whole story, because we are going to resell covers at some point. And when we resell the covers, we're going to collect $20,000 something for selling the covers, and we're going to sell more short calls and collect $20,000 selling more short calls. And all of a sudden the spread is free. But instead of the 170, 200 spread we started with, now we have a free, it was $15,000 when we started. Now we're going to have a free, unless things get worse, but we're going to have a free 140, 170 spread. It's the same spread, but now we have more long calls than we had before. So before it was only going to be $45,000. Now it's a $60,000 spread at 170, where before 170 was our base. Now 170 is our goal. That's the adjustment we made here. So I just want you to understand it's so powerful. That's what we call a salvage play, though. It's if you act, and by the way, this is a big counter to something that happened earlier in the week or last week. I don't remember exactly when it was in chat, but somebody had a disastrous position on something else that because they didn't act, because they didn't do anything. This is the difference. The learning of this compared to the other trade, which I forgot what the trade was, but the learning of this compared to the other trade, which, oh, maybe it's Lockheed Martin, might have been Lockheed Martin. So compared to somebody who got stuck in a Lockheed Martin trade, that doesn't sound right now. All right, whatever. But the person who got stuck in a trade and didn't pull out and didn't adjust got really hit hard. We still fixed it, but it got hit really hard. This is nothing. We actually improved the trade. We're going to make more money at lower strikes, and we're going to get more money back. So we're like, you know, this is a favor to us that the stock dropped 20% after we bought it. And again, assuming it does recover, but we think it will. The first thing we do is analyze it and say, were we wrong? Were we stupid? It's like, no, the people right now are completely overreacting to a very minor adjustment. They're just lowering their guidance, and things didn't go as smoothly as they thought, but this is a heavy, heavy growth company that's making real money. And their projections are that they're still going to make money. They're still going to make $10 per $140 share this year. It's not even, they're not even guiding down, except just a teeny adjustment, like 5%, 10%. It's not worth worrying about. And again, because the stock was cheap in the first place, that's why we bought it. We didn't buy it when it was 30 times earnings. We bought it when it was 15 times earnings, and we said, wow, if it goes any lower than that, we want more. And there it is, boom, we want more. So then Warren, who he likes to give master classes, and he loves it. It's actually his favorite thing. So I just tell him, I'm like, hey, here's a good master class, and he goes right to work. That's all I tell him. Like, hey, turn this into a master class, and he's like, oh yeah. Because he gets to do all his emojis. He loves his emojis. But seriously, this is a great read. I mean, this is your education here. There's a masterclass in salvage play, and he goes over all the details and what we're doing and what the reasoning is and what the logic is and how the trade works mechanically and how you move the things around and what it does and what you're rebuilding and how you're repositioning. What most traders do, don't do this. Don't panic sell when the long calls are at the lows. Don't freeze with deep in the money puts. Don't ignore rolling opportunities. Don't close the trade entirely and take the loss. Don't panic is basically what it says. It's on the cover of the Hitchhiker's Guide, right? Don't panic. That's not trading, that's bleeding out. Then he says know when to salvage. Not every trade can be salvaged, which is very wise. But if the thesis holds, first thing we did, does the thesis hold? Is the time frame adequate? Do we have enough time to recover? Of course we do. We only bought the trade a month ago. And does the math support it? And yes, it does. We're happy with the numbers. We're happy with the layout. We're happy with the money that we're spending to roll and move the position. So in other words, this trade, if we close it, is a $30,000 loss. See, 27, 12, 9, 9. That's a $30,000 loss. So if we close that trade, we're down $30,000. Instead, we spent $30,000 to reposition the trade into something that can now win. So instead of taking the $30,000 loss, which is still a loss, we shift the money from cash into the position and improve the position. So the position becomes a better asset for us and has a better chance of making money going forward. Taking the loss means we took the loss. When we have no chance to make it back, we have to make money with the other money. We ditch the position, right? And we take a $30,000 loss, so now we have no position and a $30,000 loss. It's gone. That money's gone. We can never use it to make money back. It's sunk cost. But this way, we move $30,000 from our cash pile into the position. Instead of losing the position, we salvage it. We salvage the position, turn it into something productive, and now we have less cash. So rather than buying some new position somewhere, we said, oh, let's take $30,000 and put it in this. And by the way, our allocation units are $100,000. So, we're fine doing that because we only spent $15,000 in the first place on this. So we still have cash in our allocation block, but the margin on this is heavy, so not really. So basically, we're currently at a full allocation block here. It would be bad if it drops 20% more. That would be very annoying for us. I don't think that's going to happen, though. I think we're pretty good on this one. And again, if we had more money, if we were not new in our portfolios, I would have put much more money into it. I would have doubled down. I would have tripled down. I would have gotten super aggressive. We're not at that, though. That's not where we are in our portfolios. We have new portfolios. We're being very conservative. And believe it or not, that's what I call a conservative adjustment. So anyway, study this. It's good stuff. It really, really is good stuff. It's an excellent presentation by Warren. Let's see if there's any last question because I got to go. Oh, it was UNH. Thanks, Swamp. Okay, Swamp Fox. It was UNH that was the disaster trade that we also had to fix. But this is the difference though between what happened with UNH and what happened here is jumping on top of it right away and saying to yourself, oh, it's down 20%. What's my next move? What am I going to do? What can I take advantage of? Thank you. So What is the rationale behind some home builder stocks, DHI, going up? The long-term lowering of rates. No matter what happens, come hell or high water, Trump is putting in somebody who is going to lower the rates, and home builders are going to have a fantastic year next year. People are going to run out to get mortgages, buy homes, so on and so forth. Also, there's a massive housing shortage. We are short 5 million homes in America. So in other words, because of the lack of building during COVID, and a lack of building due to high interest rates and lower demand and so on and so forth, we simply haven't built enough homes. And therefore, when people need replacement homes, and when homes get wiped out in a disaster and so on and so forth, there's not enough replacement stock. So there's a shortage of homes. What do home builders have? They have empty plots of land. They have a reserve bank of land to build on. That's their assets, and they have the access to the building materials and so on and so forth. And since there is a lack of home building still, they're buying their building materials at decent prices. They're still getting good prices. You can complain about lumber costs and stuff, but they're still getting it for prices that they can make good profits on. And so that's our short premise on builders. All right, so thank you everybody for coming. That was actually a pretty good session. I enjoyed that. And we're 3 o'clock on the button. Good job, Phil. All right, folks, thank you very much. And we will do it again next week. All right, take care.